Hey there, traders. We're back for another recap for Thursday, March 13. This is the day we're looking at on the SPY chart. So we've had this zone on the board since probably last week. And every day for the last few days, this week at least, this zone has come into play. They've been in the zone during the day at some point. Yesterday they closed right in the middle of it. But today, not only did they open below it, they never got to it during the day, and they closed not only below the low of the 2 days ago, which was, I guess, Tuesday. They closed below yesterday, so it doesn't look too good for the bulls. We're going to look at a weekly chart in a minute, talk about something else, but this is the area that they need to close above, especially on the weekly chart, for the bulls to possibly stage a rally. This is the zone that they could have bounced from Monday or Tuesday from a timing perspective. Didn't do it, and they really went down today and didn't have a very good showing. On this 2-hour chart, notice the breakup candle here on Tuesday. As this green candle went up, the low was around 552. Notice that prices kind of stayed within the body of this breakup candle. They had a few closes, at least on this 2-hour chart, below the low of this, below 552, which could negate this bullish consolidation. However, I think they're up a little bit in the post market. Doesn't really mean a whole lot, but just want to point that out just to say that there could be a little bit of a jump from here. There's a few things going on right here where price could pull up in the overnight session, and in the morning, we'll see what happens. But if we go all the way back up to a weekly chart, I want to point something out here. So maybe we need some more room. So let's zoom out here. So this is the important zone that the bulls could have bounced from. We talked about the bulls really not wanting a weekly close below this area if they want to go up. Could take a week or two, but here's something I just want to point out. This blue line here, it's going up here. That's the 50-period moving average. So 50-week average. It's kind of a general rule of thumb here. When price is above the 50-period moving average, price is generally bullish. The market in general is bullish. They fought it here. They got below it. Price is generally bearish until they got back above it. They're bullish again. So back here, a couple weeks here in October of 2023, they got below it. 1 week later, they got back above it, and they have not been back to the 50-period moving average since. So let's look at what they're doing here. This is a weekly candle. So tomorrow is Friday. This week will close. So they're already below the zone. They're below the 50-period moving average. Are they going to do something like they did back here in October of 2023 and close below the 50-period and then pull up the next week and continue to go higher? They could do this. This is an important area. They're below now. Where will they close tomorrow? That's the question. I did find some compelling areas below this that could be a target. They could be going down there. But if you get a weekly close below this, especially 2 or more weeks below this 50-period moving average, then we might have a battle here, which could be the beginning of a longer-term bearish move. I'm not going to rule out the bulls trying to stage a rally. They've had some time. We've had 4 days this week. They haven't been able to do it, so not sure what's going on. This is an important zone. They're not succeeding in getting back above this zone all week long. There are some very important levels below current price where the SPY could be headed to, and it seems like it could be far away, but they've fallen a lot in the last few weeks, so never say never. So just a couple things I want to point out back on the daily chart. The bulls have some work to do to get price up again. This is what the daily levels and the game plan looked like this morning, sent out at 9:13 a.m. before the opening bell. You can read through this if you'd like. I'm going to scroll down to the bottom here just to point out this disclaimer that I include on every one of these emails, to point out that after 9:45 a.m. Eastern and before 3:30 p.m. Eastern is when I like to trade. The more conservative approach is to trade in the morning and not get into trades after 12 noon or so. And I have a reason for pointing this out now, and we'll talk about later when we look at my live trades that I took. I've decided on a standard that I'm going to do whenever possible going forward for my trades. We'll get to that in a minute. Here are the 3 levels that were hit today in the SPY, and let's talk about how you would have traded them per the rules in the E-minis. We're not going to get into any trades until 15 minutes has elapsed. So price was coming down into 555.57. So going long at this level, or with that little 5-cent buffer if you wanted to, they got out of the money a little bit, no big deal. This level just needed some time to develop, and they pulled up, and so 4 points at least. Of course, you can see they went a lot higher. Now they're back up to 558.87, and this level has not been traded because it hasn't been hit yet, and so you have gone short at 558.82. That's 5 cents toward price. I'm just saving some time here by not adjusting them. You can see obviously that worked. Pulled down for base hit or more. We're not going to go long at 555.57 anymore. We've already done it. They did bounce a little bit. They got below it. Now they're coming down into 552.50. Now look at the low of this. It's 552.53. So 3 pennies above, and they pulled away That's why we want our 5-cent buffer. So this trade in the E-minis would have been triggered, and you would have been pulled in when the SPY hit 552.55, which happened right here. Nice clean base hit or more. Now this level is off the table for any more future long trades. It was 552.50. They got under it, never made it down to 549.44. Now they're back up to 552.50. This time we'll go short at 552.45. 5 cents toward price. Got out of the money a little bit. Once again, no big deal. 552.05, thereabouts, where I'm hovering, is the equivalent of 4 points in the E-minis, and that was a base hit there. So that is 4 base hits of 4 points each. If you were playing by the rules, 16 points. Not too bad. And this is a recording of 2 trades that I took, and this is what I'm going to talk about. So I've decided that whenever possible, I'm just going to record the morning from 9:30 when the market opens until 11:30. That's 2 hours, because most of the time I'm not taking a trade after 11:30 a.m. anyway. We're talking Eastern time zone here. So we'll start playing this recording, and the first trade was down at 555.57. So I'll scrub ahead here, let price get down there. They never hit 558.87 initially. And when it came down to 555.62, I added a 5-cent buffer. I had an order in the system keyed up that if the SPY would hit 555.62, I would go along with 4 contracts. And I was waiting for, this is more than a base hit, this is 5 points. And the red line over here on the SPY chart is my, what I call a fumble threshold. If they get below this and do certain things, then certain things would happen, but that wasn't necessary. They gave me my 5 points there and continued higher. And I did the same thing at 558.82. So adjusted it down to 558.82. Went short with 4 contracts. As soon as the SPY hit 558.82, it's in the system, so it's automatically. So you'll see the order in the E-minis just show up immediately. It's because it's triggered. And I probably should back up here and explain this. I did not have a limit order on the E-mini chart to buy back my 4 contracts for a quick base hit of 4 points, 5 points, or whatever. So what you see me do here, it's pretty immediate. It's going to probably be impossible to deposit exactly where it was. But what I did was just kind of moved it up as price was falling. It kind of met price. It happened to be right at 6.5 points. That was $1,300 with 4 contracts. I guess we're not going to see it exactly, but I wasn't honestly paying attention when they went up and got the order triggered, and it happened pretty fast. But anyway, more than a base hit, so I'm happy with that. And then let this go till about 11:30 and stop recording. Didn't make any more trades. And when all the levels go dotted, that's when I've kind of made the decision not to do anything, because I kind of get an early start most mornings. So if I'm going to take a lunch, I want to do it around 11:30 or so. If I can get good trades in the morning, there's no sense in hanging around the rest of the day. So that being said, I think most of these recordings are just going to be 2 hours, and my trades may or not be as good as trading every single level throughout the day. That's why we have 2 tracking logs, which we'll look at right now, actually. This is the first tracking log, playing by the rules. Here are the 4 base hits. You can read the notes of the 3 levels. One was a recycle trade. That was level 2. Got a base hit, went underneath it, came back up, got a short trade, so there are 16 points. We surpassed 60% rate of return. So our $50,000 on January 1st has turned into 80, because there's our profit based on 2 contracts traded at every single level since January 1st. I'm just going to scroll up and show you all the trades. You've seen all these, or at least I've explained all these since then. And on the Sam's Trades log, you can see the 2 trades that I took. 5 points on one trade, 6.5 points on the other. Both were with 4 contracts, $2,300 before commissions. And based on that 2 contract trade per level, I'm at 49.9%, almost 50%. However, I didn't start out the year with $50,000, and I trade more than 2 contracts each. So, my numbers are a little different. That's why I highlight every single trade, if that makes sense. So just full disclosure of what I'm doing here. And while I'm at it, I'll go ahead and explain the daily average. That should make sense. Daily average is the daily average. Like if you're trading 2 contracts, this is the daily average, $780. Maybe it makes more sense to look at the playing by the rules. $637 if you're trading 2 contracts every single day. That's what the average would be every single day. 48 days of trading this year so far. And then the average dollars per hour is based on, that's from 9:45 a.m. to 3:30 p.m. You actually see the math up here. It's this number, the daily average, divided by 5.75 hours. It's kind of your productive time, if you will. I just think that's a good metric to have in there as well. But that's a wrap for today. We'll see where they're going to go tomorrow. One more day this week. and where they close them is going to be important. We will see. But tomorrow morning, new levels, new game plan, and we'll talk about it in the next recap video, posted tomorrow evening or Saturday or sometime over the weekend. So I'll talk to you then. Thanks again for watching. Have a great day.